Hello friends, welcome to Bhavesh Sirki online class.
Hello friends, we learned how to calculate GST in the first lecture where only one transaction was involved. Today we shall see GST to be calculated when there are more than one transaction. Let us see. I am having here say dealer 1. He is selling some article. His SP is rupees 100. He sells it to dealer 2. So for dealer 2, CP will be 100. Say for example, rate of GST is 5%. Then GST charged by dealer 1 will be rupees 5. Now this 5 rupees charged by dealer 1 for dealer 2, it will be paid by dealer 2, but it will be collected by dealer 1, and whoever collects it has to pay it to the government. Now as you know, GST is ultimately paid by the customer, but here dealer 2 has already paid 5 rupees as a GST to dealer 1. So for dealer 2, if he is a businessman, not a customer, if he is a businessman, is not a customer, he got 5 rupees in his pocket. Now you will say, sir, how 5 rupees in pocket? Here, not in a pocket, I mean to say it is called as an input tax credit. That means he has paid rupees 5 to the government. He paid it to dealer 1, but ultimately that dealer 1 paid it to government. So dealer 2 has paid 5 rupees to the government indirectly through dealer 1. Now, why this is called as an input tax credit? Because at the start I told you that whatever tax is paid as GST is ultimately paid by the customer. Now, for dealer 2, his SP is say rupees 200. So it will be bought by customer for rupees 200. For customer, CP is rupees 200. And as I told you, rate of GST for that particular article throughout the nation, one tax remains the same. So he will charge at 5%, and his GST charge will be rupees 10. Now I am making it very clear. He has charged GST as 10. This GST will have two parts to be remembered. 5 rupees will be kept by dealer 2 in his pocket. I said you 5 rupees has come in his pocket. This 5 rupees will be given to dealer 2, and 5 rupees he will give it to government. So in all, government gets 10 rupees, and those 10 rupees are ultimately charged to customer. So none of the dealer in between directly pays anything to government. It may be given to indirectly to government, but whatever he has given to the government, it will be given to that particular dealer as input tax credit, which in short is called as a ITC. We shall understand this with a long chain of multiple chain of transactions, which will make your concept clearer. Dear friends, I have taken a chain of manufacturer, stockist, wholesaler, retailer and customer. I am reminding you, ultimately whatever tax of GST customer will pay, but how it will be paid to the government in steps that I am going to explain you. Say for example, I'm just I've made 2 rows over here. Say for example, selling price of manufacturer is rupees 100. Of course, that means stockist will buy for rupees 100. Now you may ask me, sir, what is CP of manufacturer? He has manufactured something, so we do not know the raw material cost, so we are not considering that. So selling price of manufacturer becomes stockist cost price. Now stockist sells it for 150 rupees to the wholesaler. So I hope you are getting this point. What will be the CP for wholesaler? Say it is 150 rupees. Whatever is SP of stockist will be CP for wholesaler. Wholesaler sells it for rupees 200 to the retailer. So retailer's CP is 200. Now retailer sells it at rate of 300 to the customer. So customer's cost price is 300 rupees. Now something very interesting you have to understand. At every stage, everybody, manufacturer to stockist, everybody is making some profit. And what is the thing to be remembered over here? How GST will be collected? What will be the ITC claimed by that particular businessman or the dealer? And how much amount will go to government as a GST? I am taking rate of GST as 10% here, my dear friends. I know it very well. I know it very well. There is no slab of 10% GST, at least in India. We have the rates of GST as 5%, 12%, 18%, 28%, as well as 0% on the essential articles. Now, I have taken this 10%. I know this is not a part of Indian tax system, but for easier calculation, I am taking it as a 10%. Now, my dear friends, manufacturer has sold the article at rupees 100. So what he will do, he will collect 10% on rupees 100. 10% on rupees 100 from the stockist. So stockist will pay rupees 10 to the manufacturer. Manufacturer will collect rupees 10. And he will pay that rupees 10 to the government. About his ITC we will not talk about, because we have not talked about his CP from raw material, etc. Now very interesting step is next step. Stockist sells it for 150 rupees. 150 rupees. So he will collect 15 rupees from the wholesaler. Wholesaler will pay 15 rupees to the stockist as GST. Remember, GST will be collected by stockist, but stockist has already paid rupees 10 in the previous transaction. So for him, input tax credit is 5. So what he will pay to the government? इसके लिए input tax credit 10 था. So what he will pay to government? He will not pay all 15 rupees. He will pay rupees 5. Now, this particular article for 150 was sold by this SP wholesaler for 200 rupees. So what he will collect from the retailer as a tax, rupees 20, he will collect it. And out of this 20 rupees, he will keep 15 rupees for himself as a input tax credit. Now, he will pay how much to the government? He will pay rupees 5 to the government. Now this 200 rupees article, wholesaler sells it to retailer pays 20 rupees. So that 20 rupees becomes ITC for the retailer. Retailer sells it to the customer for 300 rupees. So from customer he will take 30 rupees and 20 rupees he will keep for himself, and 10 rupees will be given to the government. So for customer, the total cost price will be equal to 300 plus 30, which is equal to 330, out of which 300 goes to the retailer and 30 rupees goes to the government. Now you will say, sir, where a retailer has paid 30 rupees, he has paid 10 rupees to the government. Now you see the chain. Retailer paid 10 rupees, 5 rupees wholesaler paid, 5 rupees stockist paid, 5 rupees manufacturer paid. So if you sum up all this thing, it comes to 30 rupees. So whatever tax slab by slab or step by step was given to the government was ultimately taken into consideration when customer paid the amount, right? You understand this very well. I'm explaining you one more time. Person who buys will pay the tax. It will be collected by the seller. Here manufacturer is seller. He collects rupees 10 and he pays all the amount as GST to the government, because we do not know the cost price of his raw material. We're not talking about that. Stockist sells it for rupees 150. So he will collect 15 rupees from the wholesaler, but he will keep 10 rupees for himself because he has already paid that amount to the manufacturer, and manufacturer in turn gave it to government. Now out of 15 rupees, 10 rupees he kept for himself, 5 rupees he will give it to the government stockist. Now wholesaler sells it for 200. So he will collect 10% of 200 as 20 from the retailer. From this 20 rupees, 15 rupees he will keep it for himself because it was the amount paid by him. 20 minus 15 becomes 5. So he will pay to government rupees 5. Retailer sells it to the customer. Customer will pay rupees 300 plus 30, 330. 30 rupees collected by retailer, and he got 20 rupees as ITC, that is input tax credit, and he will pay to government as rupees 30. So if you sum up this particular thing, entire this particular row, if you sum up, it comes to 30, and that is what the amount paid by the customer as a GST. 300 was his cost price. Example more to how does that chain of transactions work. Here I have taken one example that wholesaler sells an article for 1000 rupees. It is bought by a retailer. Retailer will sell it for rupees 1500 to a customer. I have not mentioned anywhere customer, but you have to of course understand retailer will sell it to customer. Rate of GST is 5%. Now how the chain will go and what will be the things paid by the wholesaler, retailer, etc. will understand. Fine. Now here I am writing for wholesaler is SP is rupees 1000. He will charge GST 5%, 5% of 1000 rupees 50. So bill amount will be rupees 1050. My dear friends, this is the bill amount. Bill amount is SP plus GST. Now remember, wholesaler has not paid GST, he has collected GST, but he has no right on that GST amount. So what he will do, he will pay to government. Government will receive, in this transaction, government receive rupees 50. My dear friends, this is the catch over here. You have to understand, government will get rupees 50 not from the wholesaler. Government has got it from the retailer, because this bill amount is for the retailer. So wholesaler sells it for 1000, collects rupees 50 as a tax. He is a collector, he is not the payer, he is a collector, and in turn he pays not from his pocket, he pays from the collecting from the next transaction, whatever done he has done. Now for retailer, what happens? For retailer, he has already paid rupees 50 as GST, and this already paid, this is for our understanding, I have written already paid. This will be technically called as ITC, that is income tax credit. Sorry, not income tax, input tax credit. Fine, I said income tax credit, it is input tax credit. Why it is called as the input tax credit? He has already paid 50 rupees to wholesaler, but ultimately that amount has gone to government. So he has already paid rupees 50. Now for retailer, we are talking about retailer. For retailer, SP is how much? Rupees 1500. So how much GST he will collect? Remember, GST collected by him this time will be equal to 5 upon 100 multiplied by 1500. Fine. So he will collect rupees 75 as a GST. Now my dear friends, he has collected 75 as GST. Government will get, which is paid by retailer, but he has collected from the customer. How much he will pay? He will not pay 75. He will pay 75 minus 50. Why? I am taking one more question. Here, dealer's SP is selling price is rupees 700. Retailer's selling price is 1000 rupees. Find GST paid by the retailer if rate of GST is 12%. Fine. This is rate of percent GST, that is 12. This question can be solved in two ways. One, traditional way or the regular way. First of all, we'll see for dealer. SP is 700. So GST will be equal to 12 over 100 multiplied by 700, that is rupees 84. So his bill amount will be equal to rupees 784. Now, this 84 rupees is collected by dealer from the retailer. So, for retailer, he has already paid rupees 84 as a GST. So that GST what he has paid is called as a input tax credit, which is equal to rupees 84, right? Now SP for retailer is rupees 1000. So his GST will be equal to 12 upon 100 multiplied by 1000, which is equal to rupees 120. But this GST is not going to pay. He has collected this much. How much he will pay to government? Fine. Paid to government will be 120 minus 84. That is, his input tax credit will be subtracted from it, and whatever amount you get, you will write it down over here. This is a one standard method, or you can say traditional method. We shall see second method, and this method is applicable. You have to read the question part very well and understand it very well. Find GST paid by retailer. So GST paid by the retailer is 120 minus 84. This has gone long steps. Let us understand profit made by retailer. Second method, profit for retailer. How much is profit he has made, that we have to understand. That is his selling price 1000 minus his cost price, that is 700, which is equal to rupees 300. Now he has to pay actual tax on rupees 300. So GST paid to government will be equal to 12 upon rupees 36. Of course, here also it was 36. But if they have asked only find GST paid by retailer, you can use this method. If they have asked the chain of things, then you have to adapt this particular method. So one thing you have to make it clear in your mind, that whatever GST we pay as a chain of things, whatever GST we have to pay, it is paid on the profit. Ultimately, it is paid on the profit. Whatever amount we paid in the first transaction is collected by us from the next chain of thing, and ultimately any GST will be paid by the buyer, and it will be paid to the government. That amount will be, the GST will be paid to the government by the buyer, by the seller, and buyer always is the benefit of that particular thing. Now we shall see a very interesting question. Question number 8 from exercise 1B. There are two dealers, dealer A and dealer B. Dealer A marks an article at rupees 9,000 and he sells to dealer B at some discounted rate, which discounted rate is not given to us. Dealer B sells that object at the least price, that is 9,000, and he pays GST as 324. My dear friends, GST here paid by dealer B is 324. That means on his profit he is paying 324. I hope that was made clear in the question 2 when I explained that particular thing. Fine. So right now we do not know his profit. So I'm considering let his profit for dealer B. We are just talking about for dealer B right now. For dealer B, profit be X. Then rate of GST they have mentioned 18%. 18% of profit will be equal to his GST. So 18 over 100 multiplied by his profit we do not know, we have taken it as X, and GST pays is rupees 324, that is mentioned over here. Rate of GST was 18%. So X will be equal to 324 into 100 upon 18. And from this you will able to calculate X as rupees 1,800. So what is X? X is profit for dealer B. I am not mentioning for dealer B because we already given the adding as for dealer B. Now we have to understand CP for dealer B. His CP will be his SP 9000 minus his profit 1800, that fetches us rupees 7200. This was a CP. But what they've asked, CP of dealer with GST, that is bill amount they've asked. So bill amount will be nothing else but rupees 7200 plus 18% of 7200. Calculation can be done easily, and that will be your total bill amount, that is CP for dealer B with GST. So again, I am making stress on this particular concept. Whenever I say GST paid by the in-between dealer is always paid on his profit. We shall see one more question. Question number 10 from exercise 1B. There is a television whose mark price is rupees 75,000. Dealer B buys that particular television at 30% discounted rate on mark price, and he sells the same television 30% on mark price, that he gets a profit of 30% on the mark price. We are been given rate of GST as 5%, and we are supposed to find GST paid by dealer B. Again, my dear friends, I will remind you, whatever GST dealer B has to pay will be on his profit. So our objective here is to calculate profit made by dealer B. So in that case, I have to make two things clear. What is the CP of dealer B? I am just dealing with dealer B only. So I am not mentioning here dealer B. CP for him will be equal to 75,000 minus 30% of 75,000. Why I am subtracting 30% of 75,000? Because he gets discount of rupees of 30% on the entire amount, and when you calculate, it will come to 52,500. Now for dealer B, selling price will be equal to 75,000 plus 30% of 75,000, and if you calculate that particular thing, it comes to 97,500. I told you we are talking about just dealer B, and because they have asked everything about dealer B, now I will find out profit for dealer B. It is 97,500 minus 52,500, and if you calculate this, it becomes rupees 45,000. Now 45,000. Now we have to find out GST paid by dealer B. GST rate is given to us as 5%. So 5 upon 100 into 45,000. That will be GST paid by dealer B. So very important again, whatever GST we pay to the government is on our profit. And GST is always calculated on selling price. We shall see one more question. Question number 11 from exercise 1B. And let me tell you, this is the most interesting question in this entire chapter. They've given us mark price plus GST of an article is rupees 15,680. Its rate of GST is 12%. A customer wants to buy that particular thing at just the mark price of the object. That mark price of the object, whatever he wants to pay, should be GST plus reduced price should be equal to mark price. So right now we are not knowing mark price. We do not know what is the reduction in the price. Reduced price means a new price. Of course, he has to give some discount. He wants discounted price such that discounted price or the reduced price plus GST is equal to mark price. So I do not know what is the mark price. So my mark price I am considering as rupees X. So if I consider this as bill amount is mark price plus GST. So original bill amount I am talking about, original bill amount rupees 15,680. Mark price we do not know, that is X. GST will be 12% of X. So this will be 15,680. Now comes little bit of algebra over here. this is x means 1x plus 0.12, that is 1.12x will be equal to 15680. I am writing it again. X plus 1x plus 0.12x, that is 1.12x, is equal to 15680. So x will be, when you calculate this, x will come as rupees 14,000. I'm not showing the calculation part right now. You can do it. 15,680 divided by 1.12, you'll get 14,000. So 14,000 is the mark price. Original mark price is rupees 14,000. Now customer wants this entire object or that particular object in 14,000. He wants to pay GST also inclusive of it. So say reduction in price be rupees y. Here we took it once as x, so I cannot use the same variable. So reduction be rupees y. So selling price will be how much now? Selling price will be how much? 14,000 minus y. Selling price will be equal to 14,000 minus y. How much GST will have to pay? GST is 12% of selling price. I hope you remember GST is always calculated on selling price. So 12% of 14,000 minus y. So what will be his new bill amount? New bill amount will be addition of this to 14,000 minus y plus 12 upon 100 into 14,000 minus y. New bill amount should be equal to the mark price. So mark price was 14,000. If you open up bracket, 14,000 minus y plus, if you do the cancellation, 1680 minus 0.12 y. So ultimately you can calculate again y, this for negative y and negative 1.2 y will make 1.12 y equal to 1680, because 14,000 and 14,000 will get cancelled. Again you can divide 1680 by 112, it will be 1,500. So reduction in his original mark price should be rupees 1,500, and this was the exactly whatever thing they had asked, is this, that what is the reduction in the price. That's all from GST. We shall see for the next session.